Hello traders, and welcome back to Trading with Bill, Forex and Options on a Monday, October 19th, 2015. Traders, great to be with you. Coming to you live from Pattaya, Thailand. We are 2.5 hours into the London session as I do this. We have cloudy skies. Looks like we're going to get some rain again. Getting used to this rain. Traders, this is helping losing traders become winning traders, and we do that as a team. We do that together, all of us. And that's the focus, is to become better traders and always learning something. Alright, so we've got a lot to talk about today. Got some Forex charts to look at and some options charts to look at. Today is Monday, so we've got to get ready for a new week in options. So before we get started, let me introduce myself to you. My name is William Gilday, and yes, they do call me Bill. Traders, I started trading in the year of 2006. In 2008, I retired as a firefighter paramedic out of the great state of Florida. 9 days later, came to Thailand for a 3-month holiday. Well, I'm in my 8th year now, and I'm still in Thailand, and I'm still trading Forex every day. So, absolutely love being in Asia. It's a great time zone to trade. I can actually trade all 3 trading sessions and still get a good night's rest. New York, only about 3 hours, and then when the time changes, it's probably only going to be about 2 hours because of the, because we start an hour later, so it's going to bring us, that would be like 12:30 if I did 3 hours, right? So, yeah. So once the time changes, we go back to standard time, I'll only have 2 hours in New York. All right, so what I look for is I look for opportunities and probabilities that I can win the trade, and I do that through listening to fundamentals. I don't trade fundamentals, traders. I do not trade numbers of fundamentals. I wait about 45 minutes, maybe even an hour, and then I trade the response to the news that has come out on a fundamental. However, I am a technical trader, and I use charts, being price action, support and resistance, Fibonacci, and I'm a technical trader. I use candlestick patterns. I watch what's going on in the markets all the time, and that's how I enter and exit my trades. And yes, I do lose trades, my friends. I wish I can tell you that I don't, but if anybody ever tells you that, please run the other way. All right, that's enough about me. Let's get the legal stuff out of the way. This is our risk disclaimer. Forex and options trading has a large potential rewards, but also a large potential of risk. You must be aware of the risks and be willing to accept them in order to invest in the Forex and options markets. Traders, most importantly, please do not trade with money you cannot afford to lose. Traders, always remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, traders, let's get started. Here we go. I'm going to start off with some Forex. This is the pound. And you're probably saying, William, what have you done now? Yeah, exactly. Well, we went back to our NinjaTrader charts. I love NinjaTrader. NinjaTrader is great. However, FXCM, because I'm registered out of the UK, allows me hedging, and NinjaTrader does not because they're a US company. So basically what happened was I put on my FXCM charts about an hour and a half to 2 hours before the London Open, and all my charts and all the data was lost. For some reason, FX Trading Station, the microscope 2.2 on FXCM, turns off their platform every weekend. Well, I guess when they turned off the platform this weekend, they erased all my data. And, I've been on them for a month now about turning their platforms off, because I like to go back on Sunday and I like to look at my charts, get ready for the next week ahead. So anyhow, make a long story short, I'm really not a happy camper today, I gotta be honest with you, because it's taken me hours to figure out what charts I'm going to use now, because NinjaTrader, believe it or not, does not have Ikimoku indicator on it, which just baffles me. I'm sure they do, it's just I'm not, and then it's not on the indicator list, so I have to find out where to get the Ikimoku for NinjaTrader. So anyhow, this is not as difficult as it looks. I know there's a lot of dots and lines here, but it's really easy, and I'm going to go over it on the next chart with you. But I just wanted to bring this pound up. I was in a chat room, and a couple of traders and the moderator took this at like 54.75, 76, and took this to the downside. So they're at 67. And this is like an hour and a half ago they took this trade. So this is coming down. I didn't take this trade. And the reason I didn't take this trade, not that I'm against it, I think it was a good trade coming off of 54.80. If you look left of the chart, you can see it was resistance. what I didn't like was we're coming into some junk here, right? So if you take a look, this red dotted line on the top of the chart, all that is showing you what the trend is. That's all it is, folks. That's all this is, just showing you what the trend is, okay? And this teal line on the bottom here, bottom of the chart, this EMA, this is a 55 exponential moving average. And then if you look at the brown line over here, there's a brown line, thin line, that is a 9 exponential moving average, okay? So basically that's it. These other indicators I took from Indicator Warehouse has a system called the DTS, Diversified Trading System. I took some of their elements of that system and placed it on my charts. And basically, it gives you basically like an alert that you should be going short or long. However, that's what these bars, you see these big red horizontal bars are in here? I'm sorry, vertical bars. This is basically telling you to go long and go short, is what it's telling you. However, we're in a range here, we're in a nasty range here, and I don't want to trade this. So it's going to be interesting when New York comes in. This has to break either way, either to the upside or to the downside. But I'm not trading into this, right? If you're trading short and you're trading into this 54.40 area, you're coming into a lot of support there. Ignore those teal dots. That is because I have my trade manager on the chart. And that's all that is. It's a trade manager, so I can basically set my trade manager to either trail it, take me out at certain levels, a certain amount of lots and stuff like that. But that's on the chart. I forgot to take it off before I took the picture. So that's what that's all about. So what I want to show you on this pound is basically we're in a range. There's nothing to do here, folks. Nothing to do. By the way, this is a great example here of this vertical line. See this green vertical line? So this comes down. We get a green arrow indicator heading to the upside. What happens? Doji, 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 blue candle. This turns to the green side. You get a green line here saying take this long, and this thing gave you a lot of pips. This is an hourly chart. So this is probably 13 or 14 hours to the upside and then goes sideways. So this was a nice trade if you would have paid attention to this. Such as our last one on our current chart. If you look at the last candle, this also has a green arrow and to go back to the upside. However, you can see these right under the, just to the bottom here, right there, you can see these little blue dots. That is a trend indicator, right? And it's blue. So these three candles have changed our trend indicator to blue from the red, which means go long. So we got, but this is a nasty range, and that's what I think the main thing that I'm trying to point out to you is that you can have any indicator you want on your charts, folks. But if you can't read price action and price structure and what's going on and understand what they're telling you, you can't just go long and go short because these indicators tell you to. Because remember, they're telling you data that's happening, but you know they don't know what fundamentals are coming out or what's not coming out. So I just wanted to show you that real quick. Let's take a look at the euro. I put the euro up here, and this was there's a channel here. I put this channel in here. You know, it's like an inverted flag here. You know, here's your channel, here's your flag, right? And we're in a range again. Okay, we're in a range again. And all I did was I just highlighted the trend line, this trend indicator, this blue dot dash line, and then here it is to the long side, blue dot dash line, right? And it's just telling you to go long. Now, if you would have come all the way back or left of the chart, you see the green arrow, and you would have taken that trade, you would have did fine. You would still be in profit, folks. Right? Comes all the way back up here. You get up to the top here, it starts going range bound. Right? This is an hourly chart. I get 3 hours into this amount of this trade, right? I can always re-enter. Remember that. You can always re-enter, you know? And you can get out. Okay? So you would have gotten out there. What happens? Change of trend. On the 60-minute chart, down she comes. Bada bing, bada boom. This is basically how this works, by the way. If you look at this little triangle here, then you get a red dot. And then you got these 4 dashed lines together. This tells you to get into the trade. However, you're 6 hours late, right? You're getting into this trade way too late on that indicator. So you really need to go down on a 30-minute or a 15-minute chart to get those indicators a lot quicker than that. But I don't use that. I don't use that at all. However, we are in this range, and if you look at price action, we're stuck at the green thick line is a 200 exponential moving average, and we're just stuck here. We're just sideways. There's nothing to do here. We're just going to sit and wait, and hopefully New York will bring some out. I do like the fact that the RSI, even though I already like to use RSI on a 4-hour daily chart, but the RSI is below the 50 level, so it's not a bad move here. But I don't like this trade. Just got to break out, give me a retest, and I'll take it. Like break out below like 1335, and come back up to 1345 or something like that. Hit it, and then give me a sell candle, a bearish candle. These candles are they're not Higanashi, they're nothing, they're regular candles. I can change time frames. I already took components of the DTS that I wanted on the chart. And I'm going to remove some probably, but I just took what I wanted and left the rest, right? Okay, let's go over to options. Wow, we're 10 minutes into this trade. Let's go over to options. Here is our new trade for the week. However, we're going to look for getting into another trade because this is pretty far out. We're looking at taking Nike. The good old Nike sneakers. Yeah. So I was doing some research over the weekend and looking for a trade, and we're looking at Nike, but we're looking at selling at the 122. Got buying at the 120, which you can see here on these two pink lines, right? So price has to come way back down, almost $12, before we get in trouble here. So I'm looking at this Nike, but this does not expire, folks, until, look at this, November 27th. So this is a long way out. So this has plenty of room to go if it wants to continue to the upside. So what are we expecting here? We already are at 5 candles to the upside, right? We had 2 dojis here, and then we continue to the upside. So I'm expecting this is going to pull back, right? We expect this to pull back, and hopefully it'll just bounce back up again. Look at your weekly chart. Wow, unbelievable, huh? It already pulled back, gave us 2 weeks of dojis, and now it's broken loose. So this tells me on Ichimoku on this weekly that this thing just wants to take off. The other thing I looked at is earnings is done. Earnings came out positive for them. So earnings, we don't have to worry about earnings, okay? And that's real important if you're going to trade a stock, that you don't have to worry about earnings. The DNA is to the downside, which you would expect. I'm expecting the pullback. I'm expecting to be in the red for a couple of days, probably to the middle of the end of the week, and then this will kick back up again. Maybe in 2 weeks. I don't know. I'm not sure. This is a long-term trade. But you can see the DNA blue line is to the downside. It's at the 0.5 line here. But stochastics is to the upside. Well, look at this trending action to the upside, right? So we're just moving right along on that. So that's what the trade is in, and I'll show you that in just a second. I just have to get confirmed once the New York session opens. Okay, here's our triple Qs doing really well. We're up at 108.12. So we're heading back up. Remember that 110 is an area of concern because we're going to hit this other cloud here, and that's going to be resistance. But right now we have wide open space here. We have nothing to hold us back. So I'm just hoping this continues up. I don't like the fact that DNA now gives me a kick to the downside. I'm hoping when New York opens, this will be back to the upside again. Stochastics is doing great. It's in the overbought area, and that's a good sign for us, but just need this to come up. On this trade, we can only make $62 as profit for this trade for the week. So what we're going to do is we're at $54, and I'll show you that in just a second. If this starts to head back down, I'm just going to get out of it, take my $54, $55 and just jump out of it. I'm hoping we get a gap to the upside. That'd be great, wouldn't it? We get like a $2 gap to the upside. I can just exit this trade, make $55, $58. Maximum is 63, I think it was, or 62, and we can get out of there. Okay. All right. Let's take a look at the strike prices on my trade that I did on the Nikkei, and this is where we're at here. Like there it is right there. That's the 120. Okay. And actually, that is wrong. It should be the 122 and 120. Oh, I fixed it down here. Okay. Yeah, 122 and then the 120. I hit the wrong one here, but I fixed it here. Okay, so we're 5 contracts into this, and I'm going to get a 22-cent credit on this trade. Okay, so we hit confirm and send. All right, I got everything where I want it. Hit confirm and send. This is what this looks like. This is my confirm and send box. The most I can make a profit on this is $110. The most I can lose on this is $889. Right? That's not going to happen. We'll just get out of it if it gets bad, right? And my margin is $900, right? So that's my margin. I've already hit click and send, and we come back, and this is what this looks like. You can see the triple Qs. We got $54 in profit, and I just put the position on today. So Thinkorswim opens at the market open, and they'll hopefully take this trade, and I'll get into this trade, and you can see my BP, which is my margin, is $905. And we'll be in this trade. Like I said, this trade runs till November 27th before expiration. So if something goes wrong with the trade, we're just going to get out of it, folks, or we're just going to hold it, right? But I'm not going to let it get too far out of hand. I'm not going to wait for it to get to $500, right, as a loss. It gets to a $100 loss, or we're just going to get out of it. It's just wasn't meant to be. We can only make $100 on this, so really, $110. So really, if this gets like negative $60, $70, and it doesn't turn around, I'm just going to get out of it, right? I can always re-enter. That's how I look at it. I'd rather take a small loss and re-enter than take a big loss. So that's how we are on this at the moment. I sure don't want to be in a loss greater than what I can make for profit, right? So I'm definitely not going to let this go negative below, above $100, right? Because I can only make $100. So I'm not going to let it get negative $100. See what I'm saying? It's just not good money management. So you got to have in mind where you're gonna get out of this thing if this goes bad on you. All right. The only positive thing is we have a long way to go till expiration, so you can hold it for a while. You just got to keep a really good eye on it. But I'm not worried about it. This is 38 days out, I think it is, or 37 days out before expiration. Oh, sorry, traders. We are running on here at 16 minutes. Traders, on behalf of myself, William Gilday, and yes, they do call me Bill, thank you so much for joining me on a Monday, brand new trading week, October 19th, 2015. Please join me at Twitter, WKG1960. You can follow me, and also you can go to my website at tradingwithbill.com, and you can watch this video and any other videos that I've done in the past. Just go to the video channel. It'll take you right there. And if you would, subscribe to my YouTube channel if you have nothing better to do. And every time I put a video up, you should get a notification. Thanks, traders. Have a great trading day, and we'll catch you tomorrow. Take care now. Bye-bye.